Hi, my name is Monique Kennedy, and this is the 2024 update. This presentation will cover a lot of common questions when it comes to personal tax forms and just some general knowledge. In 2020, the W-4, which is the federal tax form, was completely redesigned with the intent to increase transparency and accuracy for individual tax withholdings. For many Americans, it did the exact opposite. When the new form was released, I had been working in accounting for about 7 years. Even I was utterly confused. We will cover the 2024 W-2, choosing the correct filing statuses, what to do if you have multiple incomes and/or dependents, the difference between gross and net pay, how to maximize tax savings with pre-tax deduction options, and understand tax tables and brackets, with some examples. The slide numbers and what time in the video that this section starts is located next to the content item, but first we have to cover a disclaimer. This presentation is for general knowledge only and understanding. This does not cover every single tax scenario, only many of the common scenarios. You are responsible for doing any additional research and for how you file your W-4, as well as verifying benefits with your individual benefits department. The scenarios listed are what-ifs and used to enhance understanding only. In 2020, the W-4, which is the federal tax form, was completely redesigned with the intent to increase transparency and accuracy for the individual tax withholdings. For many Americans, it didn't do that. It did the complete opposite. So what is a withholding tax? The withholding tax is the money that your employer takes from your paycheck, which is your gross taxable wages, and pays it directly to the government. So the company doesn't keep it, they just essentially write a check to the government on your behalf. Over the years since the W-4 was updated, calls of confusion and anger began to increase as to why I didn't take any taxes out of their checks. New employees or employees whose tax situations have changed, who are used to the tax form of 2019 and prior, have simply just filled out the forms incorrectly. As an internal control and for liability purposes, the person and/or employer onboarding and/or processing forms should not be telling employees how to fill out their forms. Forms should be accepted as is because you don't know their full tax situation and you may accidentally misadvise employees. This presentation will cover some of the most common questions and issues that I've encountered over the last 10 or so years. This is the most recent W-4. I've highlighted some common sections where I find there's confusion and errors are made, which we will go over later in the presentation. So one thing I want to say is do not feel rushed when filling out your W-4. Take your time and read it, or take it home so that you can ensure that you are filling it out fully and correctly based off of your individual tax situation. If you want to simply claim single and zero, make sure to completely fill out step 1 and check the box that says single or married filing separately. After step 1 is completed, you can just go all the way down to the bottom and sign it and turn it in. But make sure that you read the specific nuances in each section to ensure that you are choosing the correct option. Choosing the correct filing statuses. So one of the biggest errors that I see is people selecting head of household because they take care of themselves, they pay their own bills, they are their head of their one-person household. That's not what head of household is for. To be eligible for head of household, you must be unmarried and responsible for more than half the cost of keeping up your home for yourself and qualifying children or dependents. Selecting this option over single or married will take out the least amount of taxes as it reduces your tax liability, which is the amount of taxes that you should pay or have withheld from your check based on your earnings and taxable income. If receiving items such as alimony and/or child support, subtract that amount from the total bills, and that is your cost towards keeping up the home. If it is less than half, then head of household likely is not the correct selection for your specific situation. Another thing to keep in mind is BEH is not taxable income. If BEH, or Basic Housing Allowance, covers more than half of the household costs, head of household likely is not the correct option to select. Same thing with things like welfare benefits or government benefits. We will go over tax liabilities and tax brackets later in the presentation. Let me give you some examples with situations. So situation 1, Jay is married and her husband Abe contributes 25% of the household income. They have no kids. Jay selects head of household on her W-4 and Abe selects married filing jointly. Do you think Jay chose the correct filing status? The answer is no. Since Jay and Abe both work and are married, she runs the risk of not having enough taxes come out of her paycheck and owing taxes at the end of the year when they file, because head of household would take out the least amount of taxes. Situation 2. M is a single mother with one child, and her household costs equal $40,000 per year, and she receives $25,000 a year in child support and alimony. M selects head of household on her W-4. Do you think that M chose the correct filing status? Since M does not pay over half of the expenses for her and her child's household, by selecting head of household, she may end up owing taxes at the end of the year, depending on her income and what she puts as things like dependents to claim. Because again, remember, head of household, you must be unmarried, have a qualifying dependent, and cover more than half the household costs for both you and your dependent. Situation 3. Vera is a single mother and has one child. She is unmarried and her household costs are $40,000 a year. She receives $5,000 a year in child support. Vera selects head of household. Do you think that Vera selected the correct filing status? Yes, since Vera is unmarried and pays more than half of the household costs for her and her dependent, head of household is perfect for her. Situation 4. Ash and Bob are married. They split all household costs 50-50. Sometimes one may pay a little bit more than the other, but generally it's 50-50. They have one child, and they both select head of household on their W-4s. Do you think that Ash and Bob chose the correct filing status for their situation? Probably not. They split household expenses and are married. If they both select head of household, they run the risk of not having enough taxes taken from their paychecks and potentially owing money to the government because, again, they didn't have enough taxes taken out. So a very common error that I see when it comes to multiple incomes independence is step 2 on the W-4, which contains instructions on whether to check box 4C, which is just this little tiny checkbox, or leave it blank. The qualifications to check the box are if you have 2 incomes in the household that are relatively close to the same taxable income, then this box should probably be checked. This includes if you work 2 jobs and/or if you and your spouse both work. It's important to note that box 4C should be checked on both W-4 forms. If it's not checked on both forms, you will run the risk of owing taxes when filing, because not checking that box will read as you are married and your income is the only source of income in the household. So it'll read it as, oh, the estimated amount is less than XYZ, which calculates how much taxes to withhold. So you may not be taxed on the correct bracket. In step 3, dependents are added. Include children under the age of 17, and other dependents. Some stipulations for this are that no one else should be able to claim these dependents on a tax return, and they should not be able to file their own tax return. This means that only one person should claim the dependent. If both you and or your spouse or the other parent and the child claim the child as a dependent, your withholdings may not be correct, and you or they may owe taxes when filing. This is because if only you claim the dependent, well, it's correct because you only have one child. But if you and your spouse claim the dependent on the W-4, well, when you file your taxes, it's going to look like you have 2 children when it comes to your withholdings. So you may end up owing taxes at the end of the year because you double claimed dependents. When claiming dependents, follow the instructions on the form. You can no longer enter just 1, 2, etc. If you were to put 1 in box 3, there's no way the person processing will know if it should be 2,000 or 500 in the deduction box. So it will not be a valid form. You should not claim yourself as a dependent. When you fill out the top part as single, married, head of household, that's essentially how you're going to claim yourself. Putting yourself in that box as well is not advisable because you don't claim yourself as a dependent. Putting an amount in box 3 will lower the taxes being taken out of your check because it lowers your taxable income. It is not the amount that's taken out throughout the year. I've been asked on many occasions why taxes weren't taken out of someone's check because they put, say, $4,000 in box 3, thinking that it would make $4,000 come out in taxes for the year. It is also important to add the qualifying dependent amounts together and actually put it in line 3C. If it's not in line 3C, it doesn't count and it's going to read as 0 because a lot of people use that line to workshop. For example, if you are claiming one child under the age of 17 and one other qualifying dependent, you will enter $2,500 in box 3. Here are some examples on how to fill out those boxes. Example 1. R is married with 2 children under the age of 17 that only she claims. She can fill out step 3 as shown, which is in the multiple of 2,000. You multiply that by 2 because there are 2 dependents under 17. Then she will transcribe that onto line 3, as shown. Example 2. M is married with 1 child under the age of 17 and 1 other qualifying dependent that only she claims. She will fill out step 3 as shown. She has 1 dependent child under 17. That would be 2,000. And 1 other dependent would be 500. Next, she will add those 2 numbers together, and that is what she will put on line 3 as shown. Note, if there are no dependents being claimed, skip step 3. It will read as 0 at that point.